Hey everybody, I'm Jer. Welcome to my YouTube channel. I received an email. Let me open this up so we can read it. It's on the screen already. Okay. Hey Jer, it's always great watching your videos and especially on Waitr Holdings stock. Thank you. Have you done a detailed cash flow forecast and forward-looking cash flow forecast on this company, which I can view it, please? Thanks and regards, Megnad, Dubai. I want to go to Dubai someday. Okay, so I have not done a detailed report, written up everything and what I believe is going to be cash flow, the future cash flow of Waitr. I can look at where they've come from, what they're doing, and look at what they are investing in, and kind of, I guess and estimate where revenue will go, uh, how much it'll increase, and how and why. But because the company is changing and is growing into different verticals, it's very difficult to be able to estimate what the future holds because I don't know exact numbers of cash flow for their investments. So, like with Cape payments and flow payments, and the other one, I can't remember what the other one was. And then their most recent Kova, I believe it's called payments. Um, I can look at what those businesses did, but a lot of them didn't give complete public financial data on what their revenue and profit was. So it kind of leaves me in like the dark, kind of leaves us in the dark. But I can say that I believe that that will grow because I know that only a certain percentage of the US uh, has legalized cannabis sales, and um, as more of the US legalizes it, dispensaries will need payment options, will need payment processing options and delivery options, and Waiters getting ahead of that. So I know that there's a huge chance for increased revenue off of that, and then also I believe a huge chance for a huge opportunity for net income, a larger net income off of that. Uh, so where like Waitr, which is now going to be ASAP, where Waitr was primarily focused on food delivery before, and we saw an increase in that, in revenue and profit from that because of COVID and the lockdowns. Um, we're seeing a decrease in those now because we're getting out of lockdowns, and there's obviously going to be less food delivery orders, um, and that's to be expected. So, but there's going to be still more food delivery orders, in my opinion, than what there was pre-COVID, before COVID, because people have adjusted, and a lot of people for the first time used food delivery services, and they're okay with paying that premium to have food delivered to where they don't have to go out and drive to someplace. So I think there's going to be less orders than during COVID, more orders than pre COVID, but still we're going to see a decline in that from like 2020 levels and even 2021 levels. So the good thing about what, in my opinion, what ASAP Waitr is doing is that they are building out a moat, what's called a business moat. And whenever we talk about a business moat, that moat is like different verticals for the business to survive if one vertical may not make it or doesn't do as good as what it was doing before. Um, so Waitr now is building out a moat, which is great for the business. It's it's kind of a struggle for short-term investors, But for long-term investors, it's great because they're going to have more verticals. There are going to be challenges with these verticals, of course, but they're going to have more verticals than, like, let's say, a DoorDash, which is now burning through hundreds of millions of dollars a quarter, um, and is just focused primarily on being a delivery service of food. And I think that that's going to be an issue. And the same thing with Grubhub. Um, they haven't built out any moats really, other than um, they're worse off, in my opinion, than what even DoorDash is, but they're burning through cash slower. Um, they're not doing grocery delivery, whereas DoorDash is doing grocery delivery, um, and has entered into doing like retail delivery. But again, that's going to see more decreases. Like, more people are using the delivery options, but you're going to see a decrease in that because hopefully we're getting past this pandemic. And as we're getting past this pandemic, people are going to be ordering less. Um, and more than pre-pandemic, but less than during the pandemic. And if you're burning through hundreds of millions of dollars, that's an issue, because your profits, probably your income, net income, is not going to match that. And if you're trading at 17, 20 times earnings, that's an issue. So something I'm very happy about what Waitr is doing is, hopefully I'm talking loud enough to where you can hear, but I also have kind of a sore throat. But something I'm really happy about with what Waitr is doing is they're building out a moat, and their competitors are not. Like, their competitors are still focused on more grocery delivery, more food delivery. And yes, Waitr's still focused on that. And, they have the delivery of, like, their normal, their staple uh, restaurant food delivery, and then grocery delivery, alcohol delivery where legal, and then now cannabis delivery. They're also going into payment processing, and that is part of that moat. So payment processing will be another revenue stream, and they're doing point of sale. Whereas I'm not seeing much from point of sale from their competitors. So point of sale gets them into the restaurants and hopefully other retailers too, where there's a point of sale system at the actual physical location, and customers use that. And it kind of helps with the business to where maybe they're struggling to find employees. And if they're struggling to find employees, these point of sale systems make it easier, and it's more efficient because it's a computer system that you don't have to have an employee to take an order or to process the payment, to take the debit card, credit card to the register, bring it up, bring it back. So you are saving your employees time, and in doing so, you're making it a more efficient process for those employees, for your staff, and you're making it to where you need less staff, because everything is basically done there at the table on that computer system. The only thing you really need staff for is to deliver the food and then to clean the table once the order is done. Maybe to stop by and ask and make sure everything's okay. But the staff doesn't have to take the orders anymore. So you're saying, and bring they bring the orders, but they don't have to come and collect the debit card, credit card, whatever form of electronic payment, and bring it back to the register and bring all that up and then bring back the receipt to be signed. So you don't have all of that. And everything is just much simpler, and it saves money in the long run because you're paying for less overhead and employees. You're paying a little bit for that POS system, and the transaction fee as a business, but then that's where, like, Waitr with their point of sale systems is going to see an increase in revenue because those transaction fees. And if the POS system, which it doesn't, I don't believe, cost anything up front, then Waitr would make that money. But mainly they're just getting their foot into the door of these physical locations where like their competitors are not. I'm not seeing any of that from like DoorDash or from Grubhub. So that's great. More of a moat. And so I can see an increase in revenue based off of those verticals and sources of revenue. And then there's also the fact that Waitr has registered Dude's Cannabis, which they've also registered cannabis uh, merchandise as part of the trademark and cannabis related merchandise and cannabis dispensaries. So they may even go into that line, which would also be more of a revenue source for them. So they are building that mode out. And so the future of Waitr, in my opinion, is great. But we're going to look at these numbers. Again, these numbers are going to change because of Waiter's investments into different businesses and growing their moat out, which is like a safety net for the company. There's still going to be struggles, still going to be challenges, obviously, but it's stuff that needs to be done for Waiter's future. Even if you're an investor and you're going, oh no, another offering, or oh no, they're giving out shares to buy this company. Oh no, dilution. Okay, yes, I would rather that than for Waiter to go completely out of business because they continue just to focus on food delivery. Like like that's ignorance. I don't want that for them. I want them to be making investments to be able to not just do food delivery, but to advance to payment processing and to the cannabis market, which is still largely untapped. And like DoorDash and Grubhub isn't going to touch that yet. So Waiter, I feel like, is getting ahead and securing their future, whereas DoorDash and Grubhub and others are throwing away hundreds of millions of dollars a quarter and just buying out competition that does the same thing that they do in different areas, um, which I guess is good, but also there's only so much you can grow in that, even with acquiring other companies. So that do that same thing you're doing. Whereas like Waiter is growing in different verticals and building out their mode. But let's get to your question. Let's answer that. If we go, let me pull this up here. Just one. Okay. If we go to investors.waiterapp.com, you can find all their investor information, uh, earnings reports, and updates and press releases. Okay, so 9 months ended September 30th is what we'll look at. The 3 months ended, we can also look at. The 3 months ended September 30th. They did 43 million, 448 in revenue. The 3 months ended 2020 September 30th. They did 52 million. So you see a drop off there, which is what I discussed, because this was in the height of the pandemic and lockdown and everything going on, and this is after. So you're going to see a decrease in revenue, which is some of why it dropped off after the earnings call. I don't know why people expected anything super amazing with the earnings call, but they did, and they sold, and whatever. It is what it is, and they were short-term investors, not long-term. You look at the 9 months ended September 30th. They did 143 compared to 157 million. So that's for that 9 month period. Again, you see a decrease because this was in the height of the 2020 of the lockdown. So people were ordering more, ordering out more, getting delivery done. So you went from the 157 to the 143. And I think at this point is when they were like, okay, listen, before this point, actually, This lockdown is not going to last forever. Let's think ahead. And that's when they started doing, let's get into payment processing. Let's get into point of sale systems. Let's get into cannabis because there's a future there. We can't always be the little brother to, the last mile delivery of DoorDash and Grubhub. We need to do something different. And they started doing something different, thankfully. Um, if they hadn't, I would say this is just a COVID stock, lockdown stock, get out. But they're doing other things, which makes me happy with what they're doing. Okay. Cost and expenses went up a little bit here, 2,000 compared to 84,000 in 2020. Um, so total cost and expenses, uh, this is 2021. They 146 million. This is an 86. This is 86 million. Sorry, 146 million. 135 million. Income or loss, they lost about 2.5 million, 2.6 million. Whereas they had income here 22 million. Net income from continuing operations before income taxes, 2,979,000 compared to 13,247,000 in the height of the pandemic. Income tax expenses 82,000 compared to 52,000. Net income 2 million, 2.9 million compared to 13.1 million for that 9-month period. Income per share 2 cents compared to 14 cents. Diluted 2 cents compared to 13 cents. Okay. Cash 43 million currently at this point compared to 84 million. Total current assets 55,397,000 compared to 95 million. Property and equipment, let's go down. Total 239 million in assets compared to 232 million. So the total, let me look at something real quick here. They aren't even trading at that. Um, right now, their market cap is 109 million, and their total assets are 239 million. Okay, liabilities. Total liabilities 122 million. Compared to 144 million in 2020. Total liabilities and stockholders' equity. Oh, it all adds up. The total assets, and so yeah. So total liability and stockholders' equity, 239,954,000, and they're trading at 109 million, which so they're trading below like intrinsic value by quite a bit. Intrinsic, they should be, if I'm doing this correctly, if I'm understanding this correctly, uh, they're at 87.53. Yeah, they should be trading at closer to, just off of intrinsic value, trading closer to probably right around $2 instead of 87 cents. But this stock gets like jacked around so much by shorts and market makers, it's insane. Okay, net income, 2 million, 2.9 million, compared to 13.1.2 million. Okay, so this is where you go to see where everything stands right now. It just bought Kova, which is a leading point of sale inventory and compliance software business serving cannabis dispensary retailers in North America. They are in Canada and in the US. They have an office in Colorado, I believe in British Columbia. Okay. And so we'll be able to use this service uh, for point of sale in the US as Waitr grows out, well, ASAP grows out to uh, grows out as regulation and laws approve more and more states to legalize cannabis use, recreational cannabis use. Okay, so this is the Kova website. This is their pricing and packages. This is how much it costs. I believe it's per month. Per month, um, to have this system in your store. $349 for one single location. $549 for single or multi-store retailers. $40 per each additional beyond 4, $60 per each additional beyond 1. Okay, so this is how some of their uh, revenue will come to be. Then I couldn't find much on Kova software and what their uh, profit is, but I did find their estimated revenue, which is so Kova Software is a startup and their location is Denver, Colorado. They had total funding of 28.7 million. To pay off some of that funding, we're gonna Waitr will issue ASAP will issue shares to the owners of Kova, and shares and money. So estimated annual revenue is currently at 12.4 million. So you would add that to uh, ASAP's current revenue or revenue per year, and so that will help out with revenue. And I believe their profit margin probably should be better, is better than food deliveries. So we'll see. So it's really hard to, like I said, to give a forward-looking cash flow estimate, um, except for to look at like what these different businesses, and it's more than just Kova. Um, it's also the other payment processing companies that uh, Waitr has invested in, ASAP has invested in, and purchased and acquired. So there's those revenue sources as well that will be added in over the next year or so. Then on top of that, they made an investment into Bigger Technology, which is a alternative payment service that is founded by someone who helped found SoFi. So you'll have that in the future as well. So it's all right now just future building and working towards um, being more profitable and growing revenue into the future. And that takes money and it takes time. Um, but I feel like Carl Grimstad, the CEO, and his team are doing great things for the future of the company. Does that mean you're going to see the stock price double next week? No, it doesn't. Does it mean you're going to see 1,000% increase in a year? No, it doesn't mean that either. But you will gradually see an increase as time goes by and these investments begin to uh, um, have returns, and we see return on that investment. But that takes time. The same thing can be said for like Facebook whenever they started out, and Snapchat. I saw Facebook whenever it was like $26, $25, something like that. I saw Snapchat whenever it was like $7 or $8. And people were like, "Oh, this company's not going to make it." And sure enough, these companies all made it because they were making investments into their future. They looked ahead of today. And that's what Waitr ASAP is doing. They're looking ahead of today. Whereas like some of their competitors aren't. Sad to say, they aren't. They're looking at, oh well, let's keep on trying to do what we did yesterday. Well, what you did yesterday is not going to work in the future where people are not locked down and needing to order food, you know, once a night or however often. So you're going to see a drop off of that, but they're still looking at that as if it's tomorrow and what the future holds. And somewhat, yes, it is, and people are have adapted and adopted ordering food, but it's not going to be the height of what the pandemic was and what lockdown was. So it's going to be a bigger struggle. It would be a bigger struggle for ASAP or Waitr to stay on the same path they were on. And I think that that would have meant a collapse of the business long before probably the end of next year or something. So um, I think that they're doing the right thing for the future of the company. Is it a struggle for investors? Yes. I can admit that. I can say that. It's a struggle for investors. It was a struggle for investors of Snapchat to see, okay, we're really in the red. This is really ugly, but I'm going to stay in this. I'm going to buy this. I'm going to, I believe in this company. Same thing with Facebook and other companies, like basically all companies that were growth companies that looked ahead and invested in their future. Um, does that mean that Waitr ASAP is going to be successful? No, there's no promise of that. Can it happen? Absolutely, yes. They could just as easily though be bought out in a week or however long, and all of this be added to some other company. So there's no telling. But whenever you're trading at 87 cents, it's not going to stay that forever. It can't. It can't. So I think we are in the ugly of the ugly. I think that gradually Waiters ASAP and their team is going to show returns on the investments that they've made over the last year or so. And I think those returns on investment are going to be pretty great and then gradually get better over time. So that's my opinion. That is what I see for cash flow. Hopefully that answers your question. I think it does. It's really hard to do an estimate based off of where we're at right now. Um, and obviously, I'm not affiliated with Waitr or ASAP, but that's what I see, and that's what I think for the future of the company. People may disagree, and that's fine. If you don't want to invest in a company, you don't. I'm not your financial advisor. I am not suggesting buying Waitr. I am not suggesting selling Waitr. I am just giving my opinion and what I see and believe for the company, and hopefully it helps. Okay, that's all I have. Thank you so much for the email. If you have a question about Waitr or my opinion on Waitr or any other company, maybe a company you want me to do DD research on, or you just want me to share my opinion on that company and the business model that they're doing, feel free to email me. It's jared@stockvoyager.com. I try to do videos for each of them, but sometimes I don't, depending on my interest, like what I feel about that company that you're asking questions about or have a statement about or whatever. So, but feel free to email me. It's jared@stockvoyager.com. I hope you have a wonderful day, and I will see you all very soon. Bye. Mwah.